This that you see over here, this is what is called the body of a candle. So whenever you are trading in the market, whether you're at resistance or at support, you must look at the body of that particular candle. How long or how small is it? Because the longer it is, like you see over here, that candle over there that you see, that long candlesticks simply means that there is more momentum, that the price will go to the downside, because there are plenty of sellers that are there that are ready to push the price or the market to the downside. It simply means the same if at the support that you see over here, we had maybe a bullish candle that looks like this with equally the same body as that. It would simply mean that the market will eventually push the price to the upside, because the momentum is more now with the buyers more than it is with the sellers, right? And then if you look at the body of that selling candle that I bubbled here, considering how long that candle is, that simply means that the momentum is with the sellers more than it is with the buyers. As a result, that means that we will sell and the market is eventually going to go to the downside more than it will go to the upside. Hence, now if we were trading, we would place selling opportunities. And what does that mean? It means that each and every candle that you see after the close of that candle, it took a whole day or 24 hours for it up from its open up until it's closed. Hi guys, I'm back again with another video. My name and surname is Lindokuhle Bambelo. So I'll be basically continuing like from the previous videos, but on today's video, this video will be strictly on candlesticks and what are the candlesticks that you must look out for, how do they play out in different instruments and different type of markets. So without any further waste of time, let's get into it. So what are candlesticks, right? So candlesticks or candles are what makes the charts. Everything that you see, any pattern that you see over there, at the end of the day, it is being made up of bullish and bearish candles, right? So candles are what makes the charts as they are. They show price, market participants, and what is traded, which is currencies, stocks, commodities, and indices. They display or show the open and close, the high and the low of prices of the securities or instruments that we are trading over a specific period of time. They also help us identify trends, reversal, breaks out, and continuation. So like I said, that everything that you see on the markets candlesticks, that is a graphical representation of the price movement. That is a graphical representation of what is being traded, right, as to how it's moving and everything, right? So there is a certain way that you must read candlesticks, but I will actually dive into that into the actual chart. But for now, this is just this, and then after this we'll go straight into the charts, right? So the longer the body of a candle, the more buyers or sellers that are present in that particular market. The buying or selling pressure is more intense, while small candles means there is less price movement taking place. So I will show you in the actual charts, but the longer the body of the candle, remember in Forex, we do only two things: we buy or we sell. So if you're at a support, for example, and then you have a long bullish candle, that simply means that there is high momentum, or there are more buyers in that particular market that are going to push the price to the upside. So that is what it means. They are extremely powerful, and one of the most common and powerful candles include bullish or bearish engulfing candle, or bullish and bearish pin bar, which is also known as a hammer, bullish or bearish engulfing candle, doji, morning star, and evening stars, right? But to be honest, when I learned about candlesticks, I did not necessarily learn about everything. There are candlesticks that I saw that they behave in certain way in different market conditions. As a result, when I was trying to modify things day and day, I only started focusing only on the pin bars and the bullish engulfing candles, which is what I will actually show you into the charts right now. So let's get into the charts now. right? So starting on this time frame, right? This is a 4-hour time frame. So what I want you to pay attention to, like I said, that each candlestick, let's zoom just quickly, right? So when you have a bullish candle like this one over here, okay, what does that mean? This candle that I highlighted here, the long blue one, those are the buyers in the market. They're ready to push the price to the upside. So remember, I said on the previous slide that each candle has an open, has a close, has a weak end, many more other things, right? So a bullish candle, remember, when buyers are stepping into the market, they are pushing the price to the upside. So a bullish candle opens at the lowest because we buy low, and its close is there at the highest point up before the week, right? So it's a different case now when it comes to bearish candles, because remember, we buy low and we sell high. So the open of a bearish candle, it opens at the highest point and closes below, right? So this means if you were selling and then the candle, the previous one closed there, and then the open of the next candle, a bearish candle, would open there on that horizontal black line that I made, and then you will enter a sell there, and then any money or difference from that price point to this horizontal line that is at the bottom will be the amount of money, with the difference that you would have made here would be the profits that you would have made in the market, because a bearish candle opens high and closes below. Then it's a different thing now when it comes to bullish candle, because a bullish candle opens low and closes high, right? So we have what are called the time frames, right? So each candlestick has a time frame that it lasts on. For example, this is a 4-hour time frame, right? So this is a 4-hour time frame already. This means that this long candle, if we entered a buy here, that means it will take 4 hours for this candle to be full, which is to open and to close. Then that means you will know whether we made a profit or not after the next 4 hours, right? And then when it comes to like 1 hour time frame, okay, like we're gonna take any candle. This means each and every candle that you see here, it takes an hour for it to open, but no, it takes an hour for it to open up until it's closed. So this is what candlesticks mean, that each and every candle in different time frame, it takes an hour. For example, because we're in a 1 hour time frame now, this means each candle that you see here, it took an hour for it to open and to close. Same thing if we are going to now the daily time frame, right? If we're going to a daily time frame, this means that if we sold euro Swiss francs at this point, that means it took a whole 24 hours for the market to open there and to close there. So that is how you read candlesticks. And then now you have something that is called a wick. A wick is this line, this slash shadow line, right? So this thing, this that you see over here, this is what is called the body of a candle. So whenever you are trading in the market, whether you're at resistance or at support, you must look at the body of that particular candle. How long or how small is it? Because the longer it is, like you see over here, that candle over there that you see, that long candlesticks simply means that there is more momentum, that the price will go to the downside, because there are plenty of sellers that are there that are ready to push the price or the market to the downside. It simply means the same if at the support that you see over here, we had maybe a bullish candle that looks like this with equally the same body as that. It would simply mean that the market will eventually push the price to the upside. because the momentum is more now with the buyers more than it is with the sellers, right? And then if you look at the body of that selling candle that I bubbled here, considering how long that candle is, that simply means that the momentum is with the sellers more than it is with the buyers. As a result, that means that we will sell and the market is eventually going to go to the downside more than it will go to the upside. Hence, now if we were trading, we would place selling opportunities. And what does that mean? It means that each and every candle that you see after the close of that candle, it took a whole day or 24 hours for it up from its open up until its close. So that is how you read the candle. That is what it means. And then now when we come to candlesticks like this that have these shadows, this is also a shadow. If you have, for example, a resistance, right? And then you have a candlestick that looks like this. Okay. Okay, let's actually delete this, right? So let's say you have a candlestick that looks like this. Okay. Come on, man. Hey. Nice. So let's say we had a candlestick like this. So in a candle, this is called a wick. That also tells you how much momentum is there. So let's say the market was coming from this side and then it broke this resistance and the support and turned it into resistance, right? So let's say that was the structure of the market as it is here. Impulsive move, then the retest. So what is that wick? What is that wick telling you? That wick is basically telling you that the momentum is with the sellers. The longer the wick, the more the buyer or a seller that is there. But because now we are at a resistance and then we understand that at resistance we sell. So this means that if the market broke and give you a retest and printed a candlestick like this, that would then mean that the selling momentum is with the sellers and it's gonna go down without any doubts or hesitation. And it will most likely be a sell that will last longer, because the longer the candle, the longer the momentum of sellers that will be there. It's equally the same if we were buying, right? So let's say we were buying and then we had this. Let's say we had a candlestick like this, but now it was in terms of the momentum was with the come on. Right, so let's say we're at support, right? And then the market was coming from this direction and then it eventually gives us a retest. So what does that mean? It simply means that seeing the fact that we're at support and us understanding that at support we buy. So the longer the wick of this candle, it simply means that the momentum is with the buyers. That is a candlestick representation of buyers, that the buyers will push the price to the upside. And I'm pretty sure that you see most candles like this when you're trading your indices, your Nasdaq 100 on the US 30s, because that is basically telling you about how much momentum that is there. So such candlesticks act as support and also act as reversals, right? So that is another thing that you should keep in mind. Or what does each and every candlestick mean? But like I said, that I will focus on this video solemnly on your pin bars and your bearish engulfing candles. Okay. Right. So if you look at the current market structure, we are in a bearish trend, right? So a bearish engulfing candle would be two candles that looks like this. You have a small candle and then you have the longer candle, right? So this thing of bearish, it simply means that the second candle, the body of the previous candle, this is a pure example of bearish engulfing candles. These two candles that you see over here, the blue one and the red one, that is a pure definition of bearish engulfing, right? Because this thing of bearish engulfing, it simply means that the body of the previous the candle after the previous one is bigger than the previous one. It simply means that if we are engulfing a candle, that means that the body of this red candle is bigger than the previous candle. And especially if it's at the resistance, that serves as an opportunity for you to sell. That is one of few candlesticks that I pay attention to, because I know very well how they work. But you must just not identify this type of candles anyway. The candles, it works best when it's at a support and also when it's at a resistance, or when it's a breakout and a retest to a support or to a resistance. So bearish engulfing means that this candle, to engulf, it means that its body is bigger than the previous candle. As a result, the momentum is with the candle that is longer or bigger than the previous one. So as you can see on what is going on here, the market is trending bearish. We're at a resistance, we have a trend line, and then we have a bearish engulfing candle. So we have enough confirmations to say that the market was going to sell and go to the downside. So that is what it means to have a bearish engulfing candle. And then the more ones that are being more present is these ones. This is a bearish engulfing candle. This is a bearish engulfing candle. This is a bearish engulfing candle. And then what happened after that? The market just kept after those candles going to the downside. So this is basically what it means to have a bearish engulfing candle. So now let's go and look for bullish engulfing candle. Let's look for bullish engulfing candles. Right, so at the current market conditions, right, I will combine what I just said and also with what is going on here. So if you look closely at what is going on here, the market is currently consolidating, but the aim is to show you how these candlesticks work, your bullish engulfing and your bearish engulfing candles, right? So we outlined what is bearish engulfing. So now we're going to focus on bullish engulfing, right? So when you have a bullish engulfing candle, that means the previous candle becomes like this, and then the next candle becomes bigger than the previous one. So that is your bullish engulfing candle. So when you find a candlestick like this at support, you must not hesitate to put a buying position, because it simply means that the body of that candle, which is the bullish one, the momentum now is with the buyers more than it is with the sellers. And if we can identify those candles here, look at what happened here. This is a pure example of bullish engulfing candle. And you must know that you can find these candles in all time frames, right? So notice how the market was trending to the downside. And then when it finally came to the support, it printed us some sort of a double bottom type formation, which we know that it's a reversal pattern, or it's a pattern that usually represents buyers in the market. So look at how big the body of this candle was. And then it actually was bigger than the previous candle. And then that means us understanding that the bigger the body of the candle than the previous one, the momentum is with the buyers. So that could have been enough to say we have what? We have a double bottom, we have a strong support level, we have a bullish engulfing candle because it is engulfing the previous candle. It is bigger than the previous candle. So this simply means that we would have entered our buying opportunities and targeted that level. Put the stop loss at least maybe just below. So this means that we would have entered a buy there and would have made such amount of profit to the upside. That is just how you read in candlestick. The bigger the body of the candle, it simply means that the more momentum that is there, whether it's selling momentum or it's buying momentum, right? And you find these candles on the highest time frame, which is the bigger ones that you find like this. And sometimes the result that you have candles like this is a result of the fundamentals they use, right? So like I said, that it's important to know that you don't just buy or sell anyway, because you must understand, you must combine this with the nature of the market. How is it moving? The trend, it's consolidating, or what is going on? Because now, if for example you would have put in a buy here, you would have ended up losing this trade because we are now approaching a strong previous level that was acting as a resistance. And you understand that we have not yet broken this resistance. So why would you enter a buy there solemnly because of that candle? That means you would have ended up losing that particular trade because we are at a resistance. Unless, of course, if we had broken it and came back for a retest, then we would have said that it is enough for us to buy this particular market. And remember, I said previously that also what is important when it comes to pin bars or hammer, it is the body of a candle that matters, because the longer the body of the longer the wick of that candle, especially if it's at a support or a resistance, then the momentum is with the buyers or the sellers. But in this case, this candle was now at a support, and it simply means that considering the wick of that candle and having a candlestick like this being printed at support, we usually buy because it represents or it serves as a bullish hammer or a pin bar. And then that means after this candle, I would have either entered a buy here, and then the market eventually did go to the upside. Alternatively, you would have catched the wick before the candlestick closed, and you would have made that amount of money towards the upside. So that is what it means. But to highlight much more clearly, this was the bullish engulfing candle, another bullish engulfing candle, another bullish engulfing candle. And then here we don't really have one because it looks like the market may break it and give us a retest to the upside, to the downside. So this is how you read, this is how you use a bullish engulfing candle. But I like to combine my bullish engulfing candles with pin bars. For me, that's a great combination. When I have, for example, my pin bar like here and a bullish engulfing candle, then it becomes enough for me to say I will buy this particular market, right? So yeah, guys, I think let's see if I cannot find another example where I can, maybe a practical example, so that we can come back to it to see how is it going to play out. And remember, guys, each and every time frame, it simply means that each candle will open and close at that particular time. So let's look at this current market structure, right? So if you look at carefully here, we're most likely to have a bullish continuation flag or channel, if you may. So look at how the market broke out here. It broke out impulsively with a candle with a longer body than the previous one. As a result of the market, when it finally broke at this level of resistance, it actually went to the downside. So that is why I said that it's important to note, where are you in the market? What are the current market conditions? because now it makes sense for us to look for buying opportunities, even though this was a resistance, because it has been now broken by that candle. And the next thing that is most likely to happen is the market going to the downside, to the upside, because the level now has been broken. But we could not have said the same if it was still below this resistance, because then that means there was still an opportunity for the market to sell. But because now we have broken it, and remember I said you must also look at whether is it a retest or what. And then looking at the current market conditions, the market broke out and gave us a retest, and then it gave us now a bullish engulfing. So going to the next week, we are actually anticipating, based off what is going on here, that the market is going to continue with its buying momentum, because the momentum now is more with the buyers more than it is with the sellers. Okay, so yeah guys, this is just a sneak peek of what I wanted to show you on how I use my pin bars and my hammers to actually help me in making my trading decisions. So this is how you read candles, this is how you understand candlesticks, but there are many other more candlesticks that you can pay attention to. But for me personally, these are the only candles that I pay attention to, which is my pin bar and a bullish engulfing. And then I get much more happy when I see them together consecutively and respectively, because it gives me that confidence that indeed, having seen how the market behaves when it prints those two candles, what it does, and then I just follow up on that. So if you enjoyed and like this video, please do me a favor, comment down below, hit the subscription button. I'll most definitely see you on the next video. Thank you so much for watching.